Hi, I'm Kalilah Reynolds and welcome to another episode of JN Talking Wealth, brought to you in partnership with the JN Group. If you're interested in achieving financial freedom and building generational wealth, this is the program for you. Please stay with us. In one of our previous episodes, we discussed the importance of protecting the assets of your business with insurance. However, with some reinsurers backing out of the Caribbean and Latin America, rates have been soaring. So how can businesses afford insurance to protect their assets? On this episode of JN Talking Wealth, we'll talk with Gresford Dinald of JN Bank about a solution they offer to help you with your insurance payments. It's called Insurance Premium Financing. If you want to know more about it, stay with us. But before we delve into our conversation, let's turn our attention to the spotlight.
All right, so for me, my insurance premiums, I basically pay it from my salary monthly.
Okay, so I normally save up for my insurance. So I open like a partner plan so that by the time the end of the month come, or the end of the year rather, when it's due, I have enough money to pay for it.
How I currently handle my insurance basically is I normally just kind of, as it comes in, I just deal with it because you don't really know what's going to happen on the road.
Well, I know when it's due, so a couple months in advance, I'm mentally preparing for it. So I just pay the lump sum when the time comes. Usually, I have some extra money, usually around that time or a time before that, so I'd put it towards it, so I'm good to go.
Well, I prefer to pay it cash in full, but I'm not rich, so I have to, save up for it.
I think I'd prefer doing it on a monthly basis, like in preparation for the annual premium. So each month I have pay a little towards it, and then the big lump sum just come off one time.
And how I prefer to do it, because it's annual, I try to do it like in monthly installments. So like if every 3 months or every 6 months, to kind of give me time, then that's kind of how I prefer to do my insurance.
Hi, Gresford. It's great to have you on this episode of JN Talking Wealth.
Thanks, Kalilah. Thanks for having me.
So in a previous episode, we spoke about insurance and the importance of having it. But, oh gosh, insurance is getting so expensive these days. Those premiums are just going up and up and up. So what are some solutions that can help us manage that expense?
Well, I'm glad you mentioned that. Insurance has increased significantly. And so clients, both corporate and individuals, are seeking payment options now to finance their insurance outlay. Some insurance companies do offer payment plans, like our sister company, J&GI, but the tenure is limited to a specific time. The other option is insurance premium financing.
So what's that? Insurance premium financing, how does that work?
Insurance premium financing is a short-term loan that JN offers specifically for general insurance purposes.
And what do I need to provide in order to access this type of loan?
Well, first of all, you need a valid insurance policy. That should run for a minimum of 12 months. Thereafter, the attending documents will be regular government ID, TRN. You will also need to prove a proof of address, and also you need to complete the premium finance form that is signed by all parties, that is the client, the insurance broker, and the insurance company.
So it's basically like getting any other type of loan, or is it a bit easier?
It's a bit easier. It's a bit easier. For individuals, however, they are required to pay a 20% deposit.
Okay. And is this accessible for any type of loan, for any type of insurance?
No, specifically for general insurance purposes.
Okay.
That has to be very, very clear.
So what's the maximum amount that I can get under insurance premium financing?
Well, you can access up to 100% of your policy, but it will depend a lot on how your ability to service that loan.
Okay. So you mentioned that you have to put down a 20% deposit. That would be a deposit on the cost of the insurance?
Correct.
Okay.
for individuals.
So just like when you're trying to buy a house, you need to put that 20% deposit. Buy a car, you need to put that down payment.
Correct.
Okay, so you still need to have some skin in the game.
You have to. Yeah.
And then so what's the process from there? So once you get the loan, you pay out the insurance company. How does that work?
Yes. Once the loan is approved, we pay directly to the broker or to the insurance companies, not to the individuals.
Not to the, okay, good. And what's the repayment period like?
The repayment period stretches from anywhere between 3 to 9 months.
3 to 9 months. So the benefit of this then is that you get your full year's insurance covered, and you the individual or the business get to make monthly payments.
Correct. Correct.
Okay, that makes sense, because that full year's insurance can be very expensive.
It is.
So where do I go to access this?
Oh, you can access the facility through your broker or your agent or any of the insurance companies. The product, the JN IPF product, is known throughout the industry, general insurance industry. And so it's accessible through any of these channels, as well as at any of the JN locations.
Do you work with all the insurers or just JNGI?
No, all the insurance covered. We cover all the insurance companies.
Do I need to have an account with JN first?
You can literally walk in off the street and access premium financing, as long as you have a valid insurance policy.
Okay, makes sense. So tell us about the repayment options that are available.
Okay. The repayment options, if you have a JN account, which would make the payment seamless, you can actually set up an auto transfer, or you can use our JN Bank Live platform to make these payments. But if you don't have to worry. You can do transfers from any of the banks via RTGS or ACH.
It sounds very convenient.
It is. It is a very convenient.
What are the interest rates on this type of loan?
It varies. It depends, of course, whether it's a corporate client, and it depends on the value of the policies. So, for example, an insurance for a corporate client for 9 months can be approximately 14% per annum. For individuals, it's a little higher because the risk is a little higher.
Well, any advice to people who want to access this type of loan, insurance premium financing?
Well, my advice to persons is that the cost of insurance has significantly gone up, and you need to cover your assets. And it's a smart decision to insure them, but it's an even smarter decision to premium finance them through JN product.
Makes sense. I have done this before, because when I get that quote and the quote is high, I'm like, yes. I need some kind of financing.
Yes, and we have seen an increase in premium financing since late last year when the rates went up.
Yeah, makes sense. All right, thank you so much.
You're most welcome. Thanks for having me.
Well, thank you so much for that information, Gresford, and for joining us here on JN Talking Wealth. So, you don't have to upfront all the money for your insurance premium. Try insurance premium financing to help you better manage those costs. For more information about IPF or any other banking product, contact the experts at JN Bank or visit jnbank.com. Now for our giveaway question. Tell us what IPF is and the maximum percentage you can access. The first person with the correct answer will receive a gift certificate valued at $50. Good luck! That's all the time we have today. Join us again, same time, same place, for another episode of JN Talking Wealth. Remember to like, subscribe, and share this video, and follow JN Bank on all their socials. I'm Kalilah Reynolds. Until next time.